Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today, I want to talk about payday loans, personal loans, title loans. I'm seeing a lot more of those on the credit reports of the clients that I am pulling credit for and working with. And so I'm seeing that since it's very common, perhaps we should just have a conversation about it. So thanks for joining me and let's dive in. So many of you have heard of what a personal loan is. That just means a loan for whatever type of purpose. Now, there are some restrictions on why or how you can get a personal loan, but most banks, online lending companies, credit unions, those kinds of things can offer a personal loan. They like to see a higher credit score and a positive credit profile because most personal loans are called unsecured loans. In other words, it's just based off of your signature saying, I will pay this back as agreed. So they're going off of your prior credit history in order to make a decision to loan you money. It's typically a fixed interest rate, and installment loans have the same payment every single month and usually a fixed interest rate for a certain term. So a lot of times it might be, say, 60 months, right? Well, there are some companies online such as Lending Club and One Main Financial that's the main part of their business is offering these types of loans. According to Lending Club's website, they can loan up to $40,000 and One Main will loan up to $20,000. But here's what I want to point out. These installment loan interest rates are very, very high for an installment loan. According to Lending Club, depending on the credit, the APR can be up to 36%. So their website breaks out how you need to view your money. So they charge an upfront fee, and it states it's dependent upon your credit scenario, but they charge somewhere between 3 and 6% of your loan amount that you're approved for. So they take that off the top and give you the rest. So they have an interest rate. It's probably going to be in the double digits, all the way up to 30-something%. And then they also reflect the APR. So that upfront cost kind of added to your interest rate over time gives you the APR. And their website says that they can go up to 36%. And it's just about the same for One Main. They offer interest rates from 18% APR to 35.99% APR. So let me give you an example of what that really looks like. If you were to borrow $10,000, and let's say you had a term of 5 years for the repayment, at 36% APR, your monthly payment is $361.33. So for some of you listening, you might say, you know what, that's not so bad. That's less than what a normal car payment is, less than what I might be paying in student loans. So if it helps me kind of restructure my debt or help me get to that next step, $361 I can handle. But here's the catch. If you made just the regular monthly payment over the term of 5 years, you will have paid over $11,000 in interest. To be exact, $11,679.78. So you're paying more in interest than what you actually got the loan for. And that's what really sits uneasy with me. So that's a personal loan. Sometimes they will have it be a secured loan. And if they use your car title to secure that loan, be careful. There are tons of title loan companies out there. And this is hopefully going to not set easy with you, because it felt really gross to me when I was doing the research. If you've ever driven past a title loan company, once you hear this, you're not going to think the same of them again. So you have to have clear title, and you can usually borrow somewhere between 25 and 50% of the value of the car based on the research that I've found, and usually up to about $10,000 for a loan. Here's what was just punching me in the face when I was researching. They typically charge 25% as a finance charge. So let's say you only needed to borrow $800. Your fee would then be $200 to borrow that $800, and usually it's due within 30 days. In this example, even though the finance charge is 25%, and you might be going, well, that's not so terrible hearing 25% to help you get out of, a really bad emergency kind of situation. When you do the math, that APR is roughly 304%. But this next statistic is what really blew my mind. The CFPB, that's the Consumer Finance Protection Bureau, they did some research and reported that about 80% of people who take out a title loan usually have to take out a new loan the day that that payment is due because they don't have the money to pay it back. So let's say you needed this $800 and it now cost you $200 to obtain it. Now you have to go and get another loan for $1,000. And at what cost? So one more thing you need to know about title loans is that they are not often reported to the Credit Reporting Bureau. So there's pros and cons in that. It's not an additional debt that is reported to your debt ratio. It's not a new trade line added to your credit report. There's no credit check. But if you're making on-time payments, it doesn't help you because it's not being reported. And if you're not paying on time, it doesn't hurt you because it doesn't show late payments. But if you miss that payment or payments as agreed, you likely will lose the ownership of your car because you have the title or ownership on the line. So if you are in a place where you need to borrow money with something along those lines, please be very, very cautious. Spend some time doing some research and really put some thought into, is this the best way for me to go about doing this? In my opinion, it's the very worst way to go about getting money. Now let's talk about payday loans. I live in Florida, so I drive past an AmScot all the time. I see a lot of commercials for AmScot, and so it's a payday cash advance company. And they'll loan you up to $500 or even $1,000 until your next paycheck. But their fees are extremely high and something that you need to know about. So on AmScot's website, you can actually go through and see what the finance charges are for each installment of a cash advance with their rates and their fees. They make it really easy to obtain this money too. They say no credit checks and simple application. We just need your identification and evidence that you're going to be receiving a paycheck here soon. Usually their term is 85 days to repay it, or up to 85 days, but your first installment payment is due within 15 days. So they're really presuming that you're going to have a paycheck, by this coming Friday or the following Friday. And so if you borrow $100, their fee is $36.46. Doesn't sound like a tremendous amount of money until you do the math. The annual percentage rate, that APR, winds up being over 245%. So anyway, they have this calculator where you can do installment payments and see how much it costs to borrow. So I did an example at $100 and $200 all the way up to $1,000. So let's just skip forward to their max of $1,000. If you borrow $1,000 from AmScot, you will pay $310.72 in finance charges. That makes your annual percentage rate over 211%. I know I'm throwing a lot of APRs and percents and dollars out at you. Just hear this one more time. If you were to borrow in the form of a cash advance against your paycheck from a payday loan center, the example I'm looking at on their website says, if I borrow $1,000, within 85 days, I have paid them back that $1,000 plus an additional $310.72. I know we all have hardships and we all have surprises and problems and expenses that we were not prepared for. But the best way to eliminate a situation, a circumstance in which you have to face this kind of decision and these kinds of costs is to have an emergency fund. You've heard me teaching and preaching for 2.5 years now on this podcast just how vitally important having a good credit rating, a good credit score is. Because if you have to borrow money, you want to look on paper like you don't need to borrow money. In other words, you need to have a great credit profile showing your ability to borrow money and pay it back on time, not overextended and not maxed out on your credit cards. I have a mission and a passion to help teach ways to get you there. But my friends, if you are borrowing money at these kinds of costs, I hope that you can see how it might keep you from being able to save for an emergency fund because you're wasting all of this money in finance and interest charges. So these companies are getting rich while you get closer to broke. I want to encourage you to find any way possible to have a couple $1,000s set aside for an emergency fund so you don't have to go to a payday company. You don't have to obtain a personal loan. And God forbid you do not have to put the ownership, the title on the line to borrow money against your car at the risk of losing it because you were not able to repay a couple $1,000s. When we have that emergency fund, that padding, that margin, even in these examples, these couple $100s, only to borrow a couple $100 or $1,000, it keeps those fees from leaving your pocket, which means you can get a little bit closer to paying off your debt, a little bit closer to funding more into your savings, and a little bit further away from not knowing how you're going to make it to payday. If you feel stretched beyond your means, I want to encourage you to reach out to me. I'm happy to help create a plan that could work for you with a couple simple suggestions. But I'll tell you this, the coaching that I get from my coaches in my life don't always feel good because it points out what habits I'm hanging on to and what behaviors I'm repeating that keeps me stuck. So if you're not willing to hear it, then unfortunately you might just stay stuck in that realm. But if you're ready for some big change, I'm happy to make some suggestions based on your situation to help you get one step closer to getting out from being underneath this rut. I know sometimes when you're stuck in a rut, you tend to dig yourself a little deeper, and now you've found yourself in a pit. But then this pit can feel like it's almost becoming a grave because you're getting buried. We've got to stop the actions that are digging us deeper and make some positive changes so we can start looking up and getting out. I hope you found this information helpful today. If you have questions or if you'd like some assistance, send me an email at questions@creditchristie.com. I've got some other information on my YouTube channel, so you can check me out at Credit Christie on YouTube. If you're looking for information about home ownership, you can check out my other YouTube channel called Your Loan Superhero on YouTube. If we have connected recently on Facebook, my stinking Facebook account got hacked and I got to start all over, so I'm rebuilding those connections. But we can always connect on Instagram or on TikTok at Credit Christie. And finally, I'm in the process of writing my next book, and it's going to be about money beliefs. And so if you have any thoughts, questions, suggestions, I'm open to it because I'm writing this for you. So if you send me an email, I will respond. Hey, thanks so much for listening. I'm so glad to be with you. And until next time, my friends, stay well.